Hello everyone. Good morning, good afternoon, good evening. First of all, we would like to wish you a happy new year. It is our honor to welcome you all to the third webinar of Decentralized Learning Series. We are happy to continue the success of previous events, having more than 1,000 registrants. Today, we will discuss several aspects of decentralized finance. And I would like to thank our distinguished panelists. And now I'm passing the virtual floor to the moderator, Professor Sula Luka. Sula?
Thank you, Ilya. First, I would like also to wish everybody a very happy new year and welcome you to today's webinar entitled DeFi, Where Do We Stand? Where do we go? The traditional financial paradigm, as we have known it till now, is changing. DeFi, on the other hand, being the umbrella term we use for various financial applications in cryptocurrency or blockchain, enabling transactions without the need of intermediaries, is gaining continuous momentum. For many, 2020 will be remembered as the year of COVID-19. For the blockchain community, 2020 will be remembered as the year that DeFi projects dominated in terms of technical innovation and development. In the coming months, we're expecting to see a great deal of exciting and innovative developments and breakthroughs in DeFi, ranging from new protocols to improved cross-chain bridges. We're happy and honored to have with us 4 distinguished guests: Gustav Arentov, Nathan Cadagna, Gary Heilman, and Pasquale Cirillo, to share their views on where we are currently with DeFi and where are we actually going. I will pass the floor to our guests to introduce themselves and tell us what they do in the DeFi space. I will start as I see everybody here on my screen. So I see first Gustav. So please, Gustav, would you please tell us a few things about yourself?
Thank you very much, Sola. Yes, my name is Gustav Arentov. I manage the European business development for the Maker Foundation. We're the foundation behind the MakerDAO protocol. We are currently the market leaders in terms of total value locked, in terms of market cap in DeFi. We have almost $4 billion of assets in our protocol. And we are also the biggest decentralized stablecoin project in the space and the 3rd largest stablecoin project in general. It's a pleasure to be here. I've been to one of the other decentralized conferences in person, but I think this will be a great chat. So thanks a lot.
Thank you, Gustav. Next, I see Garrick.
Thank you, Sula. Well, it's a pleasure to be back virtually for Decentralized is it the 4th time? I'm starting to lose track here. But it's great to be here. So I'm the head of research at blockchain.com, which is one of the oldest crypto asset companies, founded in 2011. We're celebrating our 10th year in existence this year. And we're best known for our non-custodial wallet, our Explorer, of course, for those who remember the blockchain.info days. We've also expanded and support a number of DeFi tokens. Aave and Yearn.finance you can trade those on our exchange. We have fiat on-ramps, euro, sterling, dollar. And I myself do research. And so I've published a few things on DeFi this past year, comparing the size of DeFi to what some people call CeFi or what we call digital asset lending platforms like blockchain.com that actually, in a more centralized way, facilitate borrowing and lending of crypto assets. And just to give away one of the headlines, interestingly, the DAOs are actually ahead of DeFi, even though DeFi gets all the buzz and the media attention. It's actually players like blockchain.com, Genesis, BlockFi, and others that are actually facilitating more borrowing and lending than DeFi still. But we can talk more about that in the panel.
Sure. Thank you, Gary. Nathan?
Hi, Happy New Year, everyone. It's great to be here. So my name is Nathan Catania. I'm one of the partners at XREG Consulting. And the reason we're called XREG is because we're all ex-regulators. So my partners, the founding partners of XREG, we all used to work in the Gibraltar Financial Services Commission. So we were actually licensing and regulating crypto companies for a while. Interestingly, I guess the companies we were registering and we were licensing were the centralized players, so not much actual regulation on DeFi, something that we can discuss later in the panel as well. And what we do as XREG is that we are regulatory consultants. So we provide regulatory advice not only to the private sector, where we work with a lot of the big players in this space, but we also do quite a lot of work for public sector authorities, policymakers, regulatory bodies, FIUs, law enforcement, and those types of people. So I like to think that I can provide two perspectives, one from the government and regulatory side, how policymakers are perceiving DeFi, and also what's happening on the private sector side as well. So recently we've actually been working with some DeFi, I'd like to say DeFi developers is probably the safest thing to say right now from the regulatory side. So we have been working with some DeFi developers just to really examine the regulatory elements to do with DeFi, which are very interesting. And I think there'll be a lot of development over the coming years on that angle as well. So that's me. It's a pleasure to be here.
Thank you, Nathan. And last but not least, of course, Pasquale.
Hi, Sulla. Hi, everyone. My name is Pasquale Cirillo. I'm the insider here because I'm a colleague of Sulla here at Unique. I belong to the Makridakis Open Forecasting Center, and I actually specialize in risk and forecasting. And my interest on DeFi is from the risk perspective. And within Unique, we are also working together with colleagues for the creation of a first DeFi course. So that's why I'm here.
Thank you, Pasquale. I suggest that we spend about an hour on the discussion, and we also take some questions afterwards from our audience, because I already see we have questions coming in. Is this okay with everybody? Great. Yes. Thank you. Before we proceed actually discussing DeFi as such, please allow me to ask a more general question on blockchain technology. As we have already mentioned, the major characteristic of 2020 for the whole world is the COVID-19 pandemic. At the same time, it is widely accepted that blockchain technology can actually reshape the future and or make the world a better place. What is the real contribution of blockchain and DeFi, if any, to this crucial situation? Starting with Pasquale, would you like to?
Yeah, sure. Yeah, I do believe that blockchain and all that is related to blockchain has already, can have a very huge impact on our lives, on the different sectors of our life. So if you think of the COVID pandemic, obviously is not something that is discussed at the moment, but I see an application of blockchain, for example, on the management of vaccinations or the logistic of vaccines. Now, that could open, for example, other issues that in terms of privacy and freedom, but for sure, it's a possible application. And for what concerns DeFi, now, if I see that in terms of my expertise, which is risk, I see an extremely huge potential in terms of optimization of risk. In particular, DeFi can be a very good tool to deal with systemic risk. So to diversify risk by decentralizing. Now, this is for sure a great opportunity in a field like insurance, because we could think of diffuse insurance that, especially in particular areas, could be a great thing. I see DeFi as a sort of evolution, if you want, in many sectors of microfinance. And we know the good impact of microfinance, and that will be on a totally new level that could have very beneficial effects. There are also problems, as we will see together, obviously, during this panel. For sure, Nathan will tell a lot about regulation. So that for sure is an issue that we have to deal with, also in terms of adoption of everything that we can categorize under the umbrella DeFi. But for sure, it's something that can have and will have definitely a huge impact on our lives.
Thank you, Pasquale. Anybody would like to add anything else on that? Gary,
yes,
please.
Thank you. Yes, this question is very near and dear to my heart because it gets to one of the first pieces of research that I published when I started studying crypto assets, and it has to do with the open access nature of DeFi, of blockchain technology. When I looked at what countries were most likely to adopt crypto assets and blockchain technology for use, oftentimes it's countries that are heavily regulated and what can be described as, suffering under a regime of financial repression and don't have access to capital markets and the ability to deposit funds into a savings account that offers a reasonable rate of interest, which really is almost all of us these days across the world. And if you're trying to save and generate some income, interest income in countries which are very restrictive, I think DeFi is really quite powerful, and blockchain technology is very powerful. Not to mention the fact that, again, it's permissionless, so you don't need a credit score. You don't need even an address. Which some of these basic things that many people take for granted around the world. Billions of people don't have some digital identification or other things you need to access the financial system. So I think it's very empowering. I think it's very democratizing. And I see it as an incredibly important mechanism for allowing the unbanked and the billions who are suffering from lack of access to financial services to gain access around the world.
Thank you, Gary. I will agree with you in this, especially when it comes to the unbanked, to be able to have access to financial services. Anybody else would like to add anything on this? Gustav, please.
Maybe I can just maybe I can just add a little bit of perspective to what Gary just said. So like the reason why I got into crypto was because I was living in Argentina. And out there, they have super high inflation. So it's kind of like the perfect breeding ground for, the use cases that were just mentioned. And basically, like in the beginning when I got there, you would change dollars in like back alleys and like fake storefronts and, like these like super shady places, right? Because you really didn't want to hold the peso. And the amounts you were able to do it in was also quite small and the fees were quite high. So I got into crypto purely based on, like living in one of these environments where, you basically have like a financial system that doesn't work, right? It's corrupted by many, many years of bad management. And right now they're in a situation where, it's really only the top part of the population that has access to properly hedging themselves by being able to buy properties and stuff like that. So like no one really holds significant amounts in pesos that they would buy stuff, right? But of course, if you are like a middle-class family or lower-class family, this is not possible for you. So what I really think blockchain and DeFi is doing, it's democratizing access to services which many people living in first world countries have taken for given. And on top of that, as Gary also mentioned, there's not really a lot of places right now where you can earn a high interest rate on your money itself. So it also evolved into this thing where it's not only like a prime use case in those places where they actually need financial services and now they can get them because the access has been democratized. It's also a way for people living in countries where the financial systems actually work to actually be able to get financial services on for example like the idle capital, shield themselves, even like the dollar, even the dollar has inflation, right? And you for sure if you just hold dollars, you still rather want to hold it in a bank account that at least earns more than the inflation on the currency itself. So for me, it's a lot about like democratizing access to services And this happens both on like the base level. So, for example, the DAI, helps people get into stability. Interest rate in DeFi helps people get into financial services, but you also have the democratization of access to more complicated products, such as, for example, providing liquidity on an automated market maker, which, historically market making was something that was very expensive, very capital intensive. You needed very good tech knowledge. But now, with not a lot of knowledge, at least, you can get into, using your funds on more complicated schemes as well. So it's really democratized the access to financial services across the board, both on like the top, more complicated layers, and then all the way down to the bottom layers.
Thank you, Gustav.
Yeah,
just something
to round off the comments, and I agree with the other panelists, but maybe bringing it back to COVID-19 as well. I think we've seen a shift, or maybe an accelerated shift in society in the use of financial technology, in the use of digital payments. It's something that was already happening, but with COVID-19, I think it's just completely accelerated these types of activities, and naturally these types of payments could lead into further usage of blockchain technology and crypto assets more generally as well. So I think it's just something that's been accelerated in the past year. I mean, these types of digital panels weren't really happening last year, and now they're happening all the time. So even the fundamentally the way we're working, the way we're interacting with each other, everything's becoming a lot more digital now as well. So I think COVID-19 has only accelerated the developments.
Thank you, Nathan. And this is actually related to my next question. Last year, that is in 2020, the amount locked in DeFi protocols has gone from about 700 million in the beginning of the year to about 15 billion in December of last year. So, I mean, do you think that this expansion was due to COVID, or I mean, especially when it comes to DeFi, where should we contribute this sort of explosion in these different new protocols and applications that we have seen last year?
Yeah, maybe I can jump in on that one. I've kind of like experienced it firsthand, and it was definitely like a very crazy ride. I think if you go back to 2019, right, there was not really a lot of stuff to be done with DeFi protocols. I mean, there was Maker and Compound, and then Maker also launched multi-collateral DAI end of the year. So before that, I think like the DeFi protocols that were existing, they were very basic, right? So I think there's been this kind of like, I almost call it like compounding innovation. So because in DeFi, everything is open source, everything, you're able to basically use these building blocks. So for example, you see a lot of projects that they kind of like pick pieces from other protocols that they either, just take the code and reuse that, or they directly interact with the protocol via some front end. Some good examples that are like InstaDApp and DeFi Saver, Sabrify, for example, they give you, access and a lot more control over what you're doing to a variety of different protocols at the same time, which improves the user experience a lot. But basically, this compounding innovation has now put us in a place where, like, if you just look at like a year back, there was not that much to do in DeFi. I mean, there was things to do, much simpler things. But as all of these things, kind of like compounded and you push forward the innovation, it really created, this vacuum that started sucking up more and more capital in the Ethereum space. We also saw things, so for example, Maker was the first DeFi project to add WBTC. And, we saw the supply of WBTC explode after that. Really, it multiplied, quite a bit. And now we're at a stage where there's actually quite a bit of Bitcoin on the Ethereum network. So, I think like a lot of these things, added together, and then we had the DeFi boom over the summer, where people, started revolutionizing the way to incentivize users to provide liquidity. So, Compound were the first ones who were really successful as this when they launched the CUP token in June. And that, basically they started to distribute tokens to people using the protocols. And we have seen a lot of protocols use this to great success. It also created kind of like what we call the DeFi bubble in the summer, Fortunately, even though a lot of people agree that it was a bubble in the summer, there was all of these yield farming, these food coins going on. It actually managed to increase the liquidity and capital in all the major DeFi protocols by a large amount, and actually kept that. So in June, when Comp launched Compound launched Comp farming, we had around 140 million DAI outstanding, and after the DeFi summer ended, we were over $1 billion, right? And we kept on increasing afterwards. So even though all of these, like meme things, they died down, most of the major DeFi protocols actually managed to retain a lot of the liquidity. So I think that is like some of the main topics that pushed forward this growth so much. And yeah, I think we will probably see a continuous increase in the DeFi protocols and the value in these. But I don't think we'll see quite the same explosive growth. I mean, and if we do, I'll be very, very pleasantly surprised. But yeah, it's definitely been a crazy year.
Sula, if I could just jump in on that as well and build on what Gustav was talking about. So I also wear an academic hat. I'm a visiting fellow with the London School of Economics. And if I put on my academic hat and I look at what's happening with DeFi, I'm reminded of this topic of cooperative capitalism. This is a idea basically that's not new. It's been around for many, many decades. Co-ops where customers of businesses have a direct stake in the business. Oftentimes the business will say, give the customer a dividend for, in proportion to the amount of, say, shopping they do at the business. One of the most famous and successful of these in the United States is a company called REI. It was founded in where I grew up in Seattle. A bunch of mountaineers had to get together to source mountaineering equipment, and basically all REI customers today get 10% of their customer purchases back in the form of a dividend. You can think about these tokens, the Comp token, which Gustav mentioned, the MKR token as well, which gives, I think, Maker and DAI a killer app in terms of a way to participate in the upside of stablecoins that a lot of stablecoins don't offer. These are forms of cooperative capitalism. And we saw things this summer. Gustav talks about it's not going to be as crazy. I've heard this before. 2018, Vitalik Buterin gave an interview on Bloomberg saying we'll never see another 1000x return in crypto. And sure enough, this summer, the Yearn.finance token went up 1000x. So be careful about saying you're never going to see something happen again, because crypto seems to be proving us wrong for how big and how fast things can grow. But this cooperative capitalism theme is, I think, a killer app, and it gives DeFi and blockchain technology and crypto a huge competitive advantage over legacy financial services that don't have the same kind of ways of incentivizing and rewarding and sharing in the growth of new protocols, new businesses, new services. I think that's a game changer. And when people ask, is this a bubble? Prices can get exuberant for sure, but oftentimes there's at least a kernel of truth that explains why we're seeing some of this radical price action, something very innovative, something that really breaks through and breaks the mold. And I think this cooperative capitalism is very much a part of that.
Thank you, Gary. Nathan, Pasquale, would you like to add something on this?
Yeah, I mean, it is extremely encouraging to see this rise of cooperative capitalism, and it's just so encouraging utilizing a protocol and then being rewarded and being part of these communities. We have seen a lot of innovation. I would argue that we probably did see a bit of a bubble over the last summer, but with most bubbles, you do see this rise of innovation. And out of many bubbles, you do have a lot of losers, but the winners are the ones that really drive the agenda going forwards. I think it is quite different to the 2017 ICO bubble. I like to think that in this case, there was a lot of innovation prior to price action, whereas in the 2017 ICO days, a lot of these tokens were sold on a 2-pager white paper. Little development, little actual innovation, many false promises. Whereas with this DeFi rise, you have seen a lot of innovation, a lot of new projects springing up that have had some brilliant ideas, and the value was created after that. So a lot of these community airdrops, these tokens, the value is being created prior to these tokens being issued, although issued is probably a dangerous word to use when you're looking at it on the regulatory side. I guess with the ICO days, you do have a lot of price action, a lot of hype, and regulators and authorities, they usually take some time to catch up. So I would expect to see some sort of regulatory movements happening after these cycles. So I mean, from my perspective, it is extremely interesting. It'll be interesting to see where the regulatory developments are in this space. But personally, I do think that the regulatory clarity, which will happen eventually, takes some time. I think they're still working through crypto and centralized players, still struggling with that before they even get to the DeFi space. But some regulatory certainty, I think, will only help to drive further growth and provide even more clarity to the space and allow even more innovation to take place.
Thank you, Nathan.
If I can add something, I totally agree with what Nathan just said. I also see, so I definitely see the parallel between the first boom and crash that we saw in 2017, 2018. That to me, it reminds me something which is something like geological era in this field, which is the dot-com bubble, because that was essentially the same stuff. So you had this explosion of things, everyone was excited and investing, and then you had the crash. But at the same time, from the dot-com bubble, we obtained things like Amazon. So, you know, it's, and I guess that it's totally normal to observe bubbles. So our markets work with bubbles, believe it or not, it's like that. So bubbles are the normality on the market. And I think that actually COVID may have helped because of the situation. Everyone was at home and whatever you want. But at the same time, I think that what Garrick said before is important, is this desire of democratizing the finance, which I think it's really a driver for the, so I don't see that like just a boom. I see that as the starting of something because of the fact that there are billions of people that are outside the standard channels for financing, the standard channel to which we in Europe or in the US, we access financial assets. So it's very important. I see that a sort of anarchy in finance that can lead to very interesting outcomes.
Thank you, Pasquale. I like the word that you use, the anarchy in finance. Gustav has mentioned a couple of times Ethereum. And of course, I mean, the epicenter of DeFi is blockchain. But as you have mentioned Ethereum also a few times, Gustav, it seems to me that specifically Ethereum for DeFi, it seems to be working very well. Benefits, challenges of it, are there any competitors to Ethereum in terms when it comes to DeFi apps?
I mean, so challenges is probably that Ethereum is too popular, it's too busy. And we see, especially during market volatility, the gas prices can become crazy, right? And this actually works against the whole ethos of what we are trying to do, right? Which is basically we want to include everyone, but a lot of people are being priced out right now by the gas prices, right? So basically, you know, right now Ethereum is kind of like in this like weird like middle stage where it's, you know, ETH 2.0 is kind of coming at some point. You have these layer 2 scaling solutions that launch, that some of them could be usable, right? but in essence, we're kind of in a pickle right now, because a lot of it is being, you know, drawn by speculation and trading and returns, and this is, you know, has really boomed the activity on Ethereum. So now it's getting super expensive, right? I mean, to send a standard transaction, it's, you know, somewhere between $5 and $10, $12, depending on the time of the day. I'm fortunate I'm in Europe, so I can kind of like do my transactions before the US wakes up. That's usually when the blockchain gets the most busy. But I think hopefully, you know, we're seeing a lot of people working on this topic, and we will hopefully see that resolved in the future, sooner rather than later. And then the reason for all of this activity being on Ethereum is, you know, right now, Ethereum has always had the most developers. So that means that the most projects were launched on Ethereum. They kind of like revolutionized the space with the smart contracts and token standards. So, you know, you have the ERC20 token, for example, which made it possible for anyone to issue tokens on Ethereum. And then basically they managed to attract this pretty big developer community. So, and with that being attracted, and during the ICO, the easiest place to do your ICO was on Ethereum. So most of the projects back then, they launched on Ethereum, which meant that the most capital was on Ethereum. Whenever you talk about financial services, it usually gets the most efficient and gets the most attention where the most capital is, right? So you could kind of like, you know, say that Ethereum is the US of the blockchain space, right? I mean, you have by far most of the activity there. What the other blockchains are kind of like competing with is that they're faster. This often comes at a trade-off of security. So like, you shouldn't always believe when a blockchain comes out with, you know, the famous X amount of transactions is possible in this blockchain. It often comes at a cost. But you know, I think right now it seems like Ethereum is in a very, very strong position to continue to dominate the Ethereum, like the DeFi space. We also see the trend where a lot of other blockchains to try to position themselves next to Ethereum. So, you know, for some of these newer generation blockchains, interoperability with Ethereum, the ability to take assets to and from Ethereum is like their top priority almost. So right now it seems like we will definitely have several blockchains, and there will be different use cases to each of them. But it seems like DeFi is planted quite solidly on Ethereum. And I expect some of the other ones to make a small comeback on that front, but I still see Ethereum as being right now in like a little bit of too good of a position.
Thank you, Gustav. Anybody else would like to add something on this?
Yeah, I can just say a few quick things. I think Gustav covered a lot of it. Agree with everything he said there. I think one, if you're kind of trying to keep an eye out for signs that maybe, you know, the canary in the coal mine, signs that Ethereum, you know, might be in trouble, like what would you look for? And one thing that I personally would keep an eye on is whether we start to see significant use of stable coins on other alternatives to Ethereum. And, you know, in the United States, there was regulation recently released, giving banks the ability to treat blockchains like the Ethereum blockchain, like other blockchains, in the same way they treat Swift, and to use them for stablecoin value transfer. If that takes off in a major way, and I suspect it could, you know, JP Morgan and other banks already are playing with stablecoins and blockchain technology. So you could see big numbers very quickly and very large transaction numbers happening this year. I mean, Ethereum 2.0 is not ready for that, right? Those transactions and that value transfer is going to have to go somewhere else. And if we start to see, you know, a powerful kind of network effect build on another chain around that stablecoin use case, I mean, that opens the door, I think, to a more credible competitor to Ethereum. So I would keep an eye on that. I think Ethereum, as Gustav mentioned, community, liquidity, security, decentralization. You could even, they have some degree of greater regulatory clarity. There was this comment from the SEC that they were sufficiently decentralized. We've seen Ripple, the number 3, formerly number 3 ranked crypto asset, now number 4 behind Tether, you know, struggle from a regulatory perspective recently. So Ethereum's even got a competitive edge there. I don't know how robust that competitive edge is. There's, I'm not a lawyer, but there's a lot of advantages that Ethereum has. It's Ethereum's game to lose. But we're also, with the stablecoin development, I think reaching a critical point where there is now potentially an angle of attack for the so-called Ethereum killers to try to exploit. We'll see what happens.
Thank you, Gary.
I think going back to one of the points that Gustav mentioned, I do think it's interesting to really think about this interoperability that we're going to be starting to see between blockchains as well. And I do agree. I think Ethereum's in a good position. That being said, I still remember the CryptoKitties completely crashing the Ethereum network a while back, and I mean, we are experiencing some inefficiencies in terms of scalability, gas prices. There is a roadmap to overcome that, but I do see other than existing protocols improving their scalability, which would really facilitate DeFi and microtransactions. I think this interoperability between different chains is going to be essential for the whole ecosystem to grow as well. So it would be interesting. I do see a lot more interoperability coming our way in the next years as well.
Thank you, Nathan. Okay, I'm moving then to the next question that I have here. Last year, also, several DeFi hacks were reported, attacks that perhaps for traditional finance would probably be impossible. How should a firm protect both itself and its customers from such hacks and challenges such as these?
So I think here I'd ask the question, who is the firm in this case? Is the firm
any firm that deals with DeFi? I don't want to
So is the firm the developer of the protocol? Is the firm a firm interacting with a DeFi protocol? Here's where it can get very very interesting.
Well, we're talking about the firm which serves customers, whether they have developed it or not. I think this is sort of a different story.
Yeah. So I mean, I guess in maybe taking a step back, if you look at a lot of the issues that we've been seeing with DeFi's, and I think someone actually pointed it out in the chat earlier. One of the big risks with DeFi is that DeFi is being built on smart contracts. These smart contracts, in theory, are automated computer programs. I like to call them. I wouldn't say they're always considered contracts, and I wouldn't say they're always smart either. But you've got these self-executing pieces of code that are being developed. But a lot of times, these protocols, they need to communicate with the outside world, right? So they need to obtain data from the outside world. And what happened with a lot of the earlier DeFi exploits is that these smart contracts, they utilize what are called oracles, and they use these oracles to obtain data from the outside. So, for example, pricing data. And a lot of these protocols or these DeFi these dApps have been built using oracle data from limited numbers of sources. In some cases, even just one single source. So even though the blockchain is immutable, the smart contracts are running on autopilot, there might not be anything wrong with the smart contracts. We're seeing hackers trying to exploit these oracles, and by exploiting the oracles, you can influence what's actually happening and what these contracts are doing. And I think that right now is it's been one of the biggest risks in DeFi. There's been a lot of exploits involving oracles. There are some groups such as Chainlink, who's a very, very popular group, who are looking at more decentralized oracles where this data is coming from multiple inputs rather than a single input and a single point of failure. So that is mitigating the risk, but it is a risk. It's been quite a big risk in the past few months in DeFi.
I think it's also like when people they mention hacks in DeFi. I mean, it's actually very rarely a hack, right? I mean, I don't really know how you guys categorize or like define a hack. but I mean, what you often see is that there's typically 3 attack vectors that people they tend to focus on, right? There's a smart contract exploitation, which is, you find a bug in the code, and that bug allows you to do something that you aren't supposed to do. And then you have the Oracle attack vector that Nathan mentioned. Here at Maker, we developed one of the first Oracle networks, actually, predate, Chainlink, for example, and we still, our Oracle's also used. They're also, decentralized, as much as those things potentially can be. We have a little bit of a different setup, but end up being used by players such as Gnosis and DYDX, for example, and a lot of other pretty big players in the space too. But then you have like the Oracle attack, and this is also one of the probably most exploited attack vectors. And then you have governance attacks. So a governance attack is, where you in some way, gain control over the ability to govern changes in the protocol, and you use that to exploit. I think one of the reasons why the Oracle attacks have been the most exploited is because they often lean around edge cases, right? And edge cases are often the things that people have like the hardest time of like coming up with. What is the actual attack vectors? And the problem is that when you have a protocol that lives on the blockchain that automatically settles, then you need to figure out what are these edge cases and how do we protect ourselves against them. When you're looking at building a new product, the edge cases are many, and they're pretty far out from probably where you begin. And I think it takes a lot of mental capacity and capability to sit and figure out these edge cases. But basically, we have seen exploits. Fortunately, I don't think that. I mean, there was a compound Oracle bug a couple of months ago because they only use one Oracle feed from Coinbase. They kind of like shrugged it off relatively easily, but apart from that, like most of the exploits we've seen are fairly small ones in the smaller projects, which I think is quite fortunate for the space, because it's something that I mean, if Maker or Compound was truly attacked, or Aave or something was emptied, or had problems, that would mean a pretty significant crash, right, for the entire space, because people see kind of like these protocols are like the most secure and most well built and audited and everything like that. But basically, like what I'm trying to get at is that these things here often happens in the smaller, newer products, and that's often because they've had like the least amount of audits. The smaller they are, the less people look at the code, the less people just review it in general. Where like the bigger you are, you can kind of basically see that for example, at Maker we have almost $4 billion in collateral, and that's kind of like the price tag that's on our back, right? So if someone figures out how to basically hack us, then that is the price tag you get. So the bigger you are, the more people also look at it. So it often happens in like the smaller, newer, more experimental projects with less experience.
Yeah, I'm glad you mentioned that, Gustav. And there's for people listening, very simple math formula, not complicated, for understanding security, because oftentimes we don't know whether something's secure until it's been battle tested. It's out in the real world. You look at the market value of something, and the bigger it is, as Gustav mentioned, that's like a bounty for an attacker. And you look at the amount of time that it's been out there at a given market value, and you multiply those, or and basically the bigger that number is, the more maybe belief you could have that it's secure. But it's a faith-based thing, because even the cryptography that underpins blockchains, these cannot, this cryptography is not mathematically proven to be secure. We only think it's secure because it hasn't been cracked yet. And the more confidence we have in the security of DeFi, in blockchains like the Ethereum and Bitcoin blockchain, which have been, billions in value over many years, is based on that simple multiplication of the value at stake and the amount of time that it's been in existence. So completely agree with everything Nathan and Gustav said. You do need to do your own research. This is very much a caveat emptor, very bleeding edge tech. There are risks. Some people would prefer to come to a blockchain.com, where we're, with our crypto engineering team, selecting which tokens to support and kind of there's customer support to help you kind of engage with DeFi. Other people would rather DIY it. Love that approach as well. But you really, if you DIY it, do it yourself, you've got to do your own homework and keep in mind that security framework I referenced.
Thanks, Garrick.
Yeah, I also have some comments, and it's the fact that I want to be positive in the sense that it should be no particular surprise that in a new market you have problems, in the sense that you have, first of all, now there is excitement. So you for sure will find adventurer on the market. That's for clear. And as Gustav said, actually, that happens mainly on the small realities. Also, the customers are not used to, many customers are approaching the thing for the first time. So the least formation, the least knowledge you have of something, the easier is to be tricked. And another thing is that do we really believe that traditional finance is immune? Because then I have to tell you one name, for example, just one example, which is Bernie Madoff. So, I mean, also traditional finance is very open to manipulation. We have a long history of manipulations. Mm-hmm. And the problem is maybe the fact that in traditional finance, there is less information. So it's more difficult to know about that. If it happens, you know that with a lot of delays in, for example, DeFi, it's more immediate. And is also the fact that if you think of banking in the Basel regulations, so that regulates the many type of risks a bank can face, you find operational risk and fraud, for example, or hack to the internet or online banking system is considered operational risk. And operational risk was have been for many years one of the fields in which we had no data, so also for modeling. And the regulator had to step in and to introduce measures like the QIS to gather that information. So the point is that the fact that you don't know and say that something happened in traditional finance does not mean that it did not happen. That's my point. So, and it's also obvious that traditional finance start pointing and saying, no, you see, these new things are not reliable, because it's a way of protecting themselves.
Thank you. Do you see any other challenges or obstacles for wide deployment of DeFi apps?
Yes, can I come in on this? Because the Financial Times just published an article on the U.S. Treasury's new FinCEN regulations regarding non-custodial wallets, and I was quoted in that. As a leading provider of non-custodial wallets, blockchain.com has a lot to say on this topic. And there's really interesting questions around these regulations and how they could impact DeFi and smart contracts and how we distinguish between a smart contract and a non-custodial wallet. And there's all sorts of problems. And the regulations were kind of rushed through just before Christmas, and there's a very short window of discussion. And these pose a threat. And I knew this conversation was going to go towards regulation at some point. Maybe now's the time to kind of start talking about this. I'll come back to what I said at the beginning about, it's really important. And I spend a lot of time with regulators, reminding them of the very positive messages, the positive story around blockchain technology that we opened up with, and how also from the regulatory perspective, and a lot of these folks are some of the unsung heroes of the story of crypto assets, I might mention. I think regulators in many countries have gotten some things wrong, but a lot of them have actually allowed a lot of the innovation to flourish, which is to their credit. They need to understand how counterproductive, I think, regulation like this can be for their own interests. And what I mean by that is, if you see rules unilaterally imposed, by even a country as large as the United States, you're likely to see, the big companies like blockchain.com, easily manage all the compliance requirements, and it puts the big fish arguably at a competitive advantage against the startups. So it shrinks innovation, or it moves innovation offshore, it moves developers somewhere else. Those people are no longer in your jurisdiction, and you can't pick up the phone and call a software developer as easily if they're in Malta or wherever, as you can if they're in New York or if they're in San Francisco, and access experts who can help you understand how to navigate and accomplish what the regulator needs to accomplish, which is to prevent bad guys from using this stuff for bad things. And so this stuff is very, I think, counterproductive. It's very important to understand that it could pose a threat also to DeFi and smart contracts, not just non-custodial wallets.
Thank you, Garrick.
Yeah, so as someone very, very close to regulation, I agree. In my opinion, I think regulatory developments are going to be significant, and they're going to have a huge impact on DeFi. I think these changes or this spotlight under non-custodial wallets, I agree, is very significant. It's happening in the US with FinCEN, but it's even happening at the FATF level. So the FATF are the global standard setters for anti-money laundering and terrorist financing. They're the intergovernmental body that really brought in or imposing that most jurisdictions start regulating VASPs, so these virtual asset service providers, at least for AML and CFT. And the latest sort of topic on their agenda, which is very much linked to the developments in the US, is really honing in on non-custodial wallets. I do think maybe non-custodial is a bit of a negative way of talking about these things. I would probably prefer to use the term self-custody rather than non-custody, because there is actual custody. It's just that the custody is in the hands of the users. But I do see that once the spotlight's been shined on these self-custodial wallets and activities, the next step after that really is looking at DeFi, looking at dApps. Like I said earlier, I think the regulators tend to take some time to really get to the bottom of what's actually happening, to analyze the activity before making these, or policymakers, I guess, before making these changes. So we saw a lot of the centralized players coming under the regulatory scrutiny over the past couple of years. We're now seeing a shift and a focus on self-custody. And I think DeFi is going to follow from that. And I think we're going to see two key challenges in DeFi. You're going to see parties that are, or DeFi projects that are claiming to be decentralized and providing a peer-to-peer decentralized means of finance. But I think you will see certain regulatory authorities, especially in the jurisdictions where they have a more robust approach, like the US, they're going to consider certain DeFi activities to be the performing financial related services. And some of these projects, you're going to have regulators such as FinCEN, you're going to have scrutiny by the DOJ, for example, in the US. They're going to consider some of these projects to be conducting financial related activities. And I think the other angle is you're going to see some of these tokens, these governance tokens. I believe that some of these tokens would be considered to be some sort of security or financial instrument by regulatory authorities too. And I think that's going to be a challenge. I think it could lead to a shift where you're going to have the pure DeFi activities, which are peer-to-peer automated related activities. Those are going to be unregulated because it would be impossible to regulate those types of activities. But you are going to have these other players that are not as decentralized as they probably should be, coming under some scrutiny in the next year or two. So sorry for maybe being a bit negative and and speaking about this from a regulator's perspective, but I think that's the way regulators will perceive some of this stuff.
I'm generally not a great supporter of regulations, or even more. I'm okay with regulations. We need that, but I don't like over-regulation. And for me, the Basel framework is an example of over-regulation that is more detrimental than useful, but it's okay. But for example, I see the initiatives that we now start seeing, for example, in the European Union after the digital finance package. I see, for example, this draft called MiCA, so markets in crypto assets, as something interesting that for sure represents a potential threats for DeFi, but at the same time could be something pivotal for adoption. So to make it something that really grows and becomes popular, because we cannot deny that at this very moment, DeFi, fintech, everything is very perceived like something for nerds. Okay, so, and I see that together with regulation, education becomes fundamental. So the fact that people start understanding what these things are. So I think that this is, and you know, I'm probably making some marketing for my university, for Sula's university, but we are a university that deals with that because we understood the importance of having education in the field of cryptocurrencies, digital economy. So, and this is very, very important. So the lack of education can be a serious barrier for the spread and evolution of DeFi and everything that we can connect, if you want, to blockchain.
Yeah, and I agree. I mean, I think regulation shouldn't be seen as a negative necessarily. I think regulation, if done right, if done in a proportionate manner, can actually protect consumers. It can foster innovation. I think Garrick's point in terms of the developments in the US, something that's potentially rushed and not thought out properly, that's something that could potentially have the opposite effect. So I think there is a lot of development, a lot of regulatory development needed, even in the DeFi space, and it needs to be done right. So, I mean, I used to work at a regulator. I worked for the Gibraltar regulator for almost 2 years. Gibraltar was quite unique, so they came up with a principles-based regulatory framework. So the companies that would be licensed under this framework, they were regulated, but in a very flexible way. So the regulator was able to take a step back, consider the risks, and apply a approach which is proportionate to the activities that these companies were doing. And that's something that, if it's done right, it can work very well. Imposing very strict and stringent rules, although it can work in many instances, it could also go the other way, and it could be overly restrictive and not proportionate at times. So it's something that I think policymakers and regulators really need to bear in mind when you're looking at this space. When you're looking at an area that's also growing substantially, very innovative, applying certain rules and thresholds can become quickly outdated as well. So that's another thing that policymakers, regulators really need to think about before they impose stringent requirements on something that could be completely different a year or two from now as well.
Thank you, Nathan.
I think just to make like a quick note on what Nathan said before, I think, you know, what happens, you know, when we have a summer like we did, where, you know, DeFi became like the hot buzzword, is that we now see a lot of projects use DeFi in their marketing materials, you know, in their names, you know, in their own branding, even though that they are like very, very far from ever being decentralized, you know, in any way, right? And I think this is, you know, I guess like somehow, you know, like tricking the consumer a little bit into thinking that you participate in a network, because that is what decentralized finance really is, right? Is that like, instead of you participating in financial services with a centralized counterparty, you participate with a network as the counterparty, right? And this, you know, enables you to, you know, have some degree of confidence that at least there's not sitting on a single person on the other side and scamming you, or, you know, in other way having control over what you're doing, right? But you can kind of like participate in your own terms. However, when companies start using this term very broadly, and I think, you know, it's starting to be used just, you know, finance with crypto or finance with blockchain in general, then you can kind of like have this thing where you can almost trick retail consumers into using your products because they think that it's something that it really is not, right? And I think, even if you just look at like the top 20 DeFi projects, there are several companies in that list that also, is quite far from being decentralized at the moment. Some of them are on the path. There's this kind of like concept of gradual decentralization that we also ourselves at Maker has been through, right? And we're dissolving the foundation throughout this year to kind of like try to complete that decentralization. But it's kind of like decentralization is a gradual process. But I think there are many companies using DeFi as a marketing term that doesn't necessarily ever want to decentralize themselves, right? So it's also something you should be aware of if you're a consumer trying to interact with these things in the space.
Yeah, and it's.
Sorry.
No, go for it.
No, I mean, I think this is something, is no surprise again, because I mean, if now you are a consultant in one of the big consulting companies, you are no one if in your talk, in your pitch, you don't say DeFi, blockchain, machine learning, and artificial intelligence. So it's obvious that unfortunately now everything, I mean, you open an ice cream shop and you call it DeFi or artificial intelligence, but this is unfortunately part of the branding because there is a hype, so everyone will put the tag, which I understand is a problem, but I mean, it's part of the history. Every time it's like that.
Yeah, and I agree, and I remember back in 2017, there were listed companies that as soon as they started using the word blockchain, their share price would skyrocket. So yeah, it's something that definitely has happened in the past. So I think Garrick made a good point earlier as well about Ethereum, for example, and I think when the US the SEC, I think it was one of the commissioners, gave a speech, and I think the speech was called when Howie meets Gary or something like that. And in this speech, the SEC themselves actually said that they considered the sale of Ether initially to be the sale of a security, but gradually over time, the network became more decentralized to the point that they don't consider it to be a security today. So I do see the point that Gustav just mentioned, having this sort of gradual decentralization. I think decentralization should be considered more of a spectrum. There's a lot of gray area in the middle of what is decentralized, what isn't decentralized, and I do think that challenge is that if you are sufficiently centralized and you're perceived as by a regulatory authority, for example, of being a central party that's responsible for some sort of activity, there is a risk there that you'd be deemed responsible for failures. So I think that's where DeFi projects, developers, and protocols really need to be careful. They really need to consider what the legal position is. If you do want to develop something that's decentralized, distributed, it's something that potentially might not happen on day one. It might even happen further down the line.
Thank you. At the same time, I see on my other screen the questions piling up from our audience. We have over 20 questions, so we're just going to try in the time that we have left to answer as many as we can. Okay, the first one that I have here that I see because, all right. Nathan, this is for you as an ex-regulator. What is your opinion on the status of New York's BitLicense?
So I guess I'll respond with maybe a bit of a caveat. I wouldn't really want to talk about individual regulatory regimes in too much detail. I think generally I'm just going to go and talk about it anyway. But I think what is encouraging is, I guess, that the BitLicense was one of the first actual financial licenses that could be obtained by a crypto company. So I think in that sense, at least, it was quite a big step in regulatory developments globally in terms of crypto asset businesses. So I think in that sense, the BitLicense was a great first step in global developments. I haven't been following the more recent developments, but I know that the the authorities responsible for the BitLicense, they have been quite innovative. They were talking about having a sort of like, I think it was called a coin listing committee, which is something that I think is important for crypto asset businesses to have in place, because considering the status and doing your due diligence on tokens and coins that you're listing, I think is extremely important. So without commenting too much, I think it was a great first step, and I think there's some good ideas coming out of the US.
If I could just maybe add a few things, and I'm going to say something that might be a bit provocative, given that I'm an American here, but so yeah, so I agree with everything Nathan said. The good news is that we've seen more companies being approved for BitLicenses. The cost of gaining that approval has gone down. There's been an effort to make it easier. There was a lot of criticism about how onerous it was when it was first released. So that's the positive side of it. The more provocative comment I'll make is that right now, New York is still the global financial capital of the world. And guess what? New York regulators, along with New York bankers and other people tied into that New York US ecosystem, would very much like to keep New York as the global financial capital of the world. And regulation is a means by which to do that. And, I guess, it's just important for people to be aware that very much is a goal that New York regulators are very much kind of interested in. And, where this gets, I think, interesting, this takes us a little bit off topic, but I don't want to go there too much, are things like, the long-awaited Bitcoin ETF, when that will be approved. Many people are expecting that this year. Well, again, I would just let, people on this call know that, the regulators have been pretty clear about what they want to have accomplished, the New York regulators, before they approve that. And they've made some inroads on these things. It's no secret that New York has gone after Tether, and Tether is responding and in the process of trying to become more transparent. And maybe that will all work out, okay. I think that's a really interesting case to watch. Can Tether transition to a more compliant and New York acceptable entity? We saw BitMEX, also be attacked by the regulators recently. Another concern, and this is something that's, I think, really important for people thinking, especially about launching DeFi tokens or crypto asset projects. Regulators are very concerned about ownership concentration in crypto assets. And the higher the degree of ownership concentration, the more likely or the greater risk there is for market manipulation. If the SEC is going to approve an ETF for Bitcoin and maybe Ethereum down the road as well, they want to make sure that, big players, the whales, so to speak, are not manipulating the price on opaque offshore exchanges. New York would like to see more activity, of course, move to New York inside their surveillance umbrella. That's just something to be aware of as you think about, the regulatory landscape and how it may evolve.
Thank you, Gary. I will try to merge actually two questions here that I see, because I believe they're related. One is for blockchain dynamics to be synchronized into Nigeria's emerging fintech market, but the other one refers to the strategy that one can use to help developing countries adopt the use of blockchain, because the majority of the people, they are not familiar with it and cryptocurrencies.
Yeah, maybe I can jump in here. So as part of my role, I've been scaling up a lot of the business that we've been doing in Southeast Asia, especially in 2019. And in 2020, I focused a lot on Europe and Africa, and I've also helped my colleague in Latin America, and kind of like also seen a lot of what she's been doing, right? And I think, in general, in regards to, developing communities in emerging markets, you really need to be able to, first off, get liquidity there, right? So that is one of the big things that we have been working very hard on, is to basically, how do you source liquidity into a country? And it basically, you need people who are, buying and selling the cryptocurrency locally. So that it would be like buying DAI, for example, and they will take, the naira or something, and they would then, you know, sell it abroad to buy more DAI, right, to get it into the country. So you kind of like need this, you know, like net positive inflow of whatever currency into the country. Once that is being established, then you can really start working on the use cases, right? So the way that we have been doing it is really, you know, how do we work with local exchanges, so like liquidity providers or other like networks. In Nigeria, we've been looking at tapping into agent networks. So they have, you know, these like forex agents, but it definitely takes a long time. I know that there's also some projects that really, you know, try to focus on emerging and developing economies. And I think to anyone who's looking at that, you really need people on the ground, right? So I think, you know, our most successful continent on that front is South America, you know, where we grew from basically nothing. And now, you know, DAI actually, I'm not sure now since Bitcoin boomed, but you know, throughout most of the year, DAI has been doing more volume than Bitcoin on the peer-to-peer exchanges. And we also managed to get ourselves on Binance peer-to-peer because we had such a strong community already there. And that's because we have like an amazing team who's been working a lot in Argentina, and we've got a lot of press and like the biggest media there because like we offer an alternative to inflation, right? So if you're looking to go in and work in these emerging markets, you need liquidity. You need to figure out a way of getting liquidity into the country, and you need local boots on the ground, right? I think, you know, I don't want to mention any names, but, you know, some of the competitors or, you know, potential competitors that are still not that far in the process to Maker has been, you know, these Silicon Valley founded companies who, you know, have people sitting in Silicon Valley and strategizing, you know, oh, how do we, you know, grow a community in the Philippines without, you know, potentially ever having been there, right? So if you're looking to do these things, you really need people on the ground, and then we have, you know, first-hand experiences with how successful that can be. But it's definitely something that, you know, takes a while. I think in regards to tapping into the startup scene in Nigeria, for example, it's something that we've been monitoring for a while. But I think some of the bigger problems that we are kind of like facing is that the way that you really expand is like, so we don't really sell a product, right? We are like a foundation who's trying to facilitate the growth. So once you don't sell a product, you cannot just like sell it to people. You need actual companies or people or partner projects locally who can help you facilitate the growth, right? So you need to figure out, how do we provide a framework for these companies to improve their business and their livelihood by using your technology? And once you kind of like can crack that part of the equation, then you can start experiencing real growth.
Thank you, Gustav. The next one that I see here is that the trend is that a lot of DeFi projects work together now or start doing it. How do you see this developing? Consolidation or cooperation of Maker, Aave, Yarn, Badger, all of these, consolidating them?
I mean, I personally see it as a positive, constructive development. There's a lot of really talented people working, you know, very hard in this space, and you know, there's going to be a rationalization of the marketplace, you know, to some degree when you have so many projects. We've seen this, you know, in the past too. I remember when 2015 blockchain became a buzzword, caused our company a lot of trouble because people were confused. So we changed our name to blockchain.com to try to help people understand that we're not, you know, the underlying technology of crypto assets. You know, we're a company, but you know, we had like 100 DLT/blockchain. These are corporate DLT blockchain kind of companies out there chasing, and you know, anytime you have that kind of explosive growth in the number of entities, eventually there's going to be, you know, a thinning. And so I think it's nice to see teams combining, working together. There's still so much opportunity out there, though. At the same time, I think there's room for, you know, entrepreneurs and people to go out and try to grab some of this, you know, blue sky. You know, we say there's a lot of blue sky out there for everyone. So it's not, you know, something where, you know, it's like, oh, the opportunities are over. You need to partner up with one of the big players, and that's the only way you're going to survive. I don't think that's the case at all for the entrepreneurs on the call. but I do think this kind of rationalization of the marketplace is probably healthy to some degree.
Thanks, Gary.
Yeah, and I will also
In
say
any
that,
case,
to these the big DeFi players, I mean, I of course can only speak for Maker, right? But I mean, to my knowledge, most of them already have pre-existing relationships where they work together in some shape or form, and like going, like I think, and in the future, right? You don't really see. I mean, maybe you could argue that like Compound and Aave are competitors because they're like very similar in their business model, right? But like Maker and Aave is different, and we've been working with them for like a long time since they were called Fland, and you have known them for many years, right? And I think like what you kind of like see now is that a lot of the different DeFi projects, they offer different things. So therefore, all of them kind of like provide infrastructure to each other. So you can see, for example, Maker, I mean, DAI is like a key infrastructure for most of the other big DeFi projects. You see Yearn, they do their yield farming vaults or like return vaults, right? In regards to most of the other protocols, and in general, I think like moving forward, we will see more and more of this collaboration. I think that we will also reach like a stage where you can see some of the companies maybe trying to alienate a little bit if they don't like the way that the DeFi space is going to. I know that I'm not saying that was exactly what they did, but you saw, for example, Compound, they are launching Compound Cash on like their own blockchain, where this seems like a very, potentially like a Silicon Valley move rather than maybe like to the true DeFi ethos. So I think like, a move like that kind of like differentiates them at least from the other players, right? So I think like moving forward, I think there will be kind of like this hub of the big DeFi protocols that all of us will, do different things, with each other across different projects and so on. And then you will kind of like see some of the protocols who's like trying to differentiate themselves in a very significant way. But in general, I think it's very positive because, as I also mentioned earlier, you have this compounding innovation. And that's also something that, of course, if we could build a product with, let's say, like just an example, Aave, and, we could take something that they have spent thousands of hours building, and they could take something that we have spent thousands of hours building, and we could make a new product that, we couldn't do individually, then you have something new to offer the user, right? So I see it as a very, very positive thing.
Thanks, Gustav. Pasquale, you
but
wanted
it's
to
also, yeah, it's also a very natural thing. I mean, this is something that we observe in all markets. I mean, it's a fundamental step, the rationalization of the market. So in order for something to become mature, you observe something like this. So I see that actually as a good signal, as something good, because it gives us the idea that we are moving towards the right steps.
Thank you.
I'd like to maybe, I guess, maybe play devil's advocate here. I think a lot of protocols and a lot of people in the blockchain space. I mean, a lot of projects in blockchain spaces, and the blockchain space generally, it's about communities, right? It's about communities of users coming behind projects. But you also see some of the, I guess, maybe the nastier side in DeFi, where rather than working together, I think you will see, because this is all open source software, I think you'll see a lot of copy pasting, a lot of attempts to maybe build something slightly better than a competitor and steal volume and users. We actually saw it happening with Sushi and Uniswap, where I think you will actually see some potentially aggressive moves by certain players to try and really steal liquidity and users from other projects as well. So even though I think the majority of players in this space, they will want to collaborate together and work together, I think you will see some aggressive, more aggressive moves from certain groups as well.
But I think that it's like a good point to bring up, right? But at the same time, what really differentiates you in this space is not your code, right? I mean, it's open and it's everyone can see it, right? It's your network effects and the amount of people using the product, the amount of other projects and protocols you're integrated with. So I think, of course, like SushiSwap has done quite well since the fork as well. But I think like Uniswap still has manifested himself as being, much further ahead, simply because that, they had so many integrations beforehand. At Maker we are coming up on 1,000 individual integrations with DAI, with projects and companies all over the world. So, like even if someone forked DAI or Maker, you have like probably the two most difficult things to copy is governance, and kind of like having a proper governance community and a strong governance community and an interest in governing this protocol. And then it's the network effects, right? And of course, I know that SushiSwap did well. I think there's like a few others that has done well, but if you look at how many projects were actually forked, I think it's like a very small fraction, right? And it's something that you can see it in fintech much more, right? That you started with having like one fintech company that did this thing, and now you have 15 or 20, and all of them has some like mediocre success, right? I think it's a little bit more difficult in crypto, or in blockchain at least, because you rely so much not only on the amount of people coming to your website, but you also rely a lot on the other projects integrating you. So I don't really speak for the Ethereum community, of course, but I think a lot of people maybe saw like what Uniswap did was either very cool and like fascinating, and you attack the big guy, and a lot of people saw it as kind of like this vampire attack. Oh, you just try to like fractionalize liquidity.
If I could just add on to what Nathan and Gustav said there, which I think is really great commentary. Community is part of your competitive moat in the blockchain space, and vampire attacks or other things you do say something about the ethos of your community. And maybe that says something positive to some people, maybe it says something less positive to someone else, and it influences how your community evolves. But community is a hugely important kind of component of the competitive moat. And this actually, if I could kind of go from that to what, Bitcoin never gets mentioned when it comes to DeFi really, other than WBTC, and but Bitcoin arguably is DeFi, decentralized and whatnot. And one of the things, just to tie something back to the regulatory conversation we had, that concerns me about community, this question of community, is some of the messages that people put out on social media that are taken to kind of represent what the community thinks. And I'll be very specific here with Bitcoin, because there's I've noticed just a growing tendency of some Bitcoiners to speak to the inevitability of a nation state attack on Bitcoin, that this is just something that's going to happen at some point, and taking a very kind of bring it on. Come at me, bro. We're ready for you. I don't think that's a good attitude to take, just to be very clear. I think communities need to think also about, stakeholders like regulators, and how they message and maybe provoke a regulator who is concerned about the appearance of not having sufficient teeth or credibility when challenged so openly by blockchain communities. So for those in the DeFi space and the Bitcoin space, just think carefully about this question of what kind of messages your community is putting out there, and what types of things it may invite that would be very counterproductive for increasing adoption, at least in the short run. And for the record, I don't think a nation state attack on Bitcoin or any crypto asset is necessarily inevitable. That's I think a bit of a overly paranoid perspective in my view.
Yeah, I think actually I see it the opposite. I think if you look at the regulatory developments globally, even though it's a challenge, a lot of businesses are having to up their game on the regulatory side. A lot of these developments are really legitimizing this new industry and this new asset class. And I think the direction of travel is actually probably more regulation and less likelihood of a nation attack. than the other way around, to be honest. The further down the line we go with regulation and developments in the regulatory side.
Thank you. We are being overwhelmed here with questions, but at the same time, we are running out of time. So I will take this last, I see an interesting one here that I will ask everybody and then ask you all for some closing thoughts on what should we expect in 2021, this year. So the question, actually all of the questions are very interesting. My eye fell on this one now. Could you please discuss the importance of oracles, especially decentralized oracles in DeFi? Should every project use decentralized oracles for their price feeds in order to avoid exploits as the latest one in Compound project?
Yes, everyone should use decentralized oracles in their projects, please. It's like one of the easiest attack vectors if you don't, especially if you use oracles that are derived from order books or automated market makers like Uniswap. This is what happens every single time that there's an exploit or something. That is because they don't take Oracle security serious enough, I think. Sorry for jumping in, but I think I wanted to make a very clear answer. Yes.
I was going to say it depends. In most cases, in the vast majority of cases, I would say yes, use decentralized oracles. But again, I think you need to look at the detail in terms of what it is you're seeking to achieve. If you're looking at developing something that's decentralized and you want to improve the security and mitigate the risks from an oracle attack, then of course I think decentralized oracles are the way to go.
Yeah, I mean, it's also like when I'm asked in DeFi specifically, right? I mean, if you're doing financial services on the blockchain in non-custodial smart contracts, if you're not doing that, I guess you can do whatever. But if you're doing that, then to protect your users. Also because when you go into a website, a lot of people, everyone says do your due diligence, but a lot of people, they don't really look into what kind of what is the oracle structure, and maybe you cannot really think about oh, what would happen if someone flash loan $50 million and dump a pool in Uniswap? Could that affect me? It's difficult for the individual user to kind of think that far, right? But yeah.
Thank you. So some final thoughts, please, on what should we expect to see this year in terms of DeFi. I will start with Pasquale.
Yeah, I think that we will see again an increase, a steady increase. So because I think that we are now at a point in which there will be no coming back. So we will see evolutions. A lot depends, as Nathan has stressed a lot, on how the regulation progresses. Maybe we will see also competition on regulations, because as also Garrick said, so the way in which you regulate a market also is fundamental to attract people to that market. So we will likely see a lot of competition in the field, not necessarily now in 1 year. So, but that's for sure something that will be on the. For the rest, I see an increase. So maybe we will not see the rate that we just saw, but there will be no coming back from my point of view.
Thank you, Pasquale. Nathan?
So I think it's no surprise that I'm going to say that I'd expect to see probably some significant regulatory developments in the next coming year. I think you'd see some big prominent regulatory authorities take a position on DeFi, hopefully a proportionate position that allows DeFi to continue to flourish. I'm very hopeful of that happening, and I do think that despite any regulatory developments, we are going to see continuing growth and innovation in DeFi.
Thank you, Nathan. Garrick?
Yes, I'll build on what Pasquale and Nathan have said. Regulation, and so the question for maybe people asking or watching this is, how do you gain more information about what's happening, what's coming? So we launched a podcast, the blockchain.com podcast. We have a monthly webinar. We had Peter Van Valkenburg, the head of research at Coin Center, Washington, D.C. based nonprofit that works with regulators on educating regulators on things like DeFi. We had Peter on our December show. Go have a listen to that. This is something that we have to invest more resources in. All of us need to do our part, spending time with regulators, putting out good content, educational materials, and I think also really importantly, sounding the right tone and not being too aggressive or confrontational with regulators. I think regulators want to see innovation. They want to see job growth. They want to see their economies grow like Silicon Valley and other centers of innovation and tech hubs have. And this is a very amazing opportunity, I think, for regulators around the world who are very smart about striking the right balance and not being too heavy-handed. It's really important that regulators, I think, understand that, today, the opportunities and the positive sides of crypto assets and blockchain technology far, far outweigh any of the negative things that we've seen to date. And I think we'll continue to see that in the future. So don't be too heavy-handed for any regulators listening to this. And we'd love to work with you on understanding kind of the right balance around this complex technology. DeFi just causes regulator heads to explode. A decentralized exchange, this is a very foreign concept for regulators. Let's be patient as an industry and a community, work with regulators to help them understand this brave new world we're entering.
Thank you, Gary. And Gustav.
Yeah, so I'm gonna predict that we will see at least $100 million borrowed to traditional companies. So like non-blockchain and non-crypto companies borrowing to finance their activities via DeFi. I also think that we will see at least one of the top 10 Western banks do something directly with a major DeFi protocol. And DAI will be above 5 billion by the end of the year. So stay tuned for that.
Thank you all.
Sula,
Yes.
should we, the both of us, suggest to follow the Institute for the Future and Unique for our interest in all these things? So, I mean, we're a university offering this, so we should propose ourselves.
I absolutely agree with you, yes. So 2021 seems to be an even more exciting year than last year. It seems like it for DeFi, for existing and new projects. It is a growing global trend, and its emergence highlights how innovation contributes to continues to reinvent the financial sector. At the same time, the DeFi enthusiasm has created new needs for new skills and talent in the crypto and blockchain world. A vibrant community of applications and users is being established worldwide. And of course, as Pasquale has already said, we are at the University of Nicosia. The University of Nicosia and the Institute for the Future, being one of the pioneers in the sector, will continue to share with all of you our work and bring to you exciting discussions such as this one. I would like to thank all our panelists for sharing their knowledge and expertise with us on DeFi, and all of you across the globe that have attended our webinar. Back to Elias now to tell us what to expect next from the Decentralized Learning Series next month, and for any other announcements that we have. Thank you all again.
Thank you, Sula. This has been an amazing panel discussion, and I would like once again to thank our panelists, and also a big thank you to you all for your participation. And before closing the event, I have a number of announcements. As in the previous events, all attendees will receive a blockchain verifiable certificate of attendance. Also, I would much appreciate your input to a survey, which will be circulated very soon. And the fourth DLS event is scheduled for the 16th of February. And the topic is how our digital future is shaped through education, research and innovation with focus on blockchain technologies. Please visit decentralized.com for more information and registration. And once again, thank you very much, and we are looking forward to seeing you in our forthcoming events. Thank you.
Thank you.
Thank you, everyone.
Thank you, everyone. Bye-bye.